everybody has that thought about things just don't feel quite right. It was the financial crisis, you saw in 2007, 2008, for me, seemed to be that point that it sort of went over a tipping point that it was like an unstoppable thing. I think I read the Bitcoin Standard, um, and I started thinking about it in a completely different way. I believe in hard money, sound money. It's a difficult subject because it is sort of a paradigm shift. People don't normally think about, the money we're using. That's something that, it's not always been there. It's not always operating that way. If you understand Bitcoin and what it could do, right, and how it could change things, everybody should have a long time horizon with Bitcoin, right? Because this is a multi-decade long change that's happening. There's probably going to be quite a significant transition from how money and financial markets operate over the next couple of decades.
Morning, James. Welcome to the Bitcoin IFA podcast.
Morning, Dan. Thanks for having me on.
Pleasure. How are you today?
Very good. Yeah. Well, a little bit cloudy outside, but other than that, all good.
Great. Listen, you've got a really interesting financial advice journey. Talk us through that.
My financial advice journey started really in 2010. I'd say so. My dad actually always had a financial advice company, and I taught at University for a year. I was going to go and work for one of the big four accounting and audit companies in the corporate finance side, but my brother actually said, "Don't go and work for anybody. I'm going to take over Dad's accountancy firm, and why don't you take over the financial advisory company?" So I heeded his advice at the time, and I dove straight into, I suppose, initially trained as a financial advisor within my dad's company, and quite quickly then ended up sort of taking the reins on that. I suppose 2012 was a big year for financial advisors. I don't know if you remember it, Dan, but there was the retail distribution review, which was the big change from advisors effectively being remunerated predominantly through commission from product sales to moving towards an actually explicit advisor charge to the client. So there was a big sort of, I suppose, professionalism of advice, I think, at that point, because you needed to really be able to justify the value you were adding to your clients on an ongoing basis, but also initially with your financial planning. So me coming in at that point was quite an interesting one, really, just because I didn't really understand the commission model because I was pretty fresh in. So I naturally started sort of pushing for a different way that we could operate so I could actually understand what the revenue model was. So it just coincided nicely with that. At the similar time, I realized we were paying investment managers too much money because we were advising our clients to use discretionary investment managers, and it was too expensive at the time. So I was looking at it and going, okay, well, these guys are making more money than we are, but they're not really doing anything with the end client in terms of from a planning point of view. So we're doing all the heavy lifting, we're building the relationships, and those guys are charging more than us. It didn't make any sense. So it's 2012 really that we became discretionary investment managers within that advice company. And we managed to reduce costs for clients. And it was really that experience of moving us to more of an advisor charging model and bringing that investment management piece in-house. That really meant I started to look at things and go, well, you know what, I think we could do a lot more of this stuff ourselves. So that really led to, in 2016, I span out the investment management side of the business into P1, which is now our investment platform and investment management business, which services or provides services to predominantly the intermediary market, so to advice firms, where we're not only providing low-cost investment management services, but we're also providing an investment platform. So people can come on, open up pensions, ISAs, they can access our investment services, or they can access third-party investment services, but really everything really became about driving digital efficiency into everything we were doing, reducing costs for the clients, just making life easier for both advisors and the clients. So I suppose, without waffling on too much, I suppose bring it up to today, I still run an advice business, and I run an investment platform and investment management business, and I do also run a small self-employed advisor network. So for me, it's quite important wearing all those hats, because it sort of gives you a front end flavour of each of those areas of the business, which really, if you've got a financial advisor, it's investment management, the platform, the product, as in the pensions, etc., and the wrappers that go within that are on the platform, and then the financial planning that's really the value chain you're interacting with directly. And everything is about, you know, making sure that the client's having a great experience across that whole value chain. But I've always had the belief the most important element of that value chain is the financial planning. That is the value add. You know, I don't believe investment management adds as much value add as some other investment managers would say. It's weird because I run an investment manager, but actually, you know, if you get the financial planning right, um, you know, if the advisor knows what they're doing, that's really what's going to deliver the returns to the client over the long term, making sure that they achieve their goals and objectives. So I've always been out and out a believer in quality financial advice is really important, particularly now.
I would definitely agree. So that end user experience is super important. But to have that through the line knowledge of an end to end use case is, I think it's so important. I worked for one of the larger networks for a very short time, and my training there was essentially on product sales, right? So it was customer relationship, which I'd already built. So when you referenced 2012 there, I had no idea what was going on in financial advice. Back then, I was deep in building a client facing customer relationship, sales, account management career in advertising, marketing, ad tech, that kind of thing. And it was those skills that really helped me transition to be a financial advisor at one of these larger networks. But the training that we got was essentially just product sales for that network's
Yep.
products. And we got almost no training on that through the line experience. So what does it look like in the back end in terms of the investment thesis, investment management, et cetera, et cetera. It was just, here's 15 funds, you can put them into one of these. Here's their breakdown between equities and bonds and commercial real estate, et cetera, et cetera. And that was
Yep.
it. So I think to have that through the line experience is super important. Obviously, it gives you an incredible view of the industry and any, you know, regulatory changes, all of that stuff. So super important. It
Well,
also sounds
weirdly
like,
enough, actually, Dan, something you said there was, I think, is you probably had training that I think is really important in terms of that account management, relationship management, that sort of sales training. Because financial advice isn't something that you have to have, right? Like if you know, you probably have to have an accountant if you've got a company. Um, you probably have to have a lawyer if you're buying a property. A financial advisor, you don't have to have a financial advisor. So you do have to. A lot of people don't like using the word sales in financial advice anymore because they think it hark back to the old commission, that sales model. But actually, you do have to sell yourself and you have to sell the benefits of financial advice to get clients. And that's an interesting thing. And I think a lot of people in the industry see now you've got this sort of this generation, not your generation, you're too young, but there was a generation, which probably my dad's generation, slightly lower. So I'm talking about the sort of the maybe the sort of 50 to 70-year-old advisors. They actually started off very much in a sales role. And actually, those guys know how to build rapport with clients quickly. They know how to manage clients very well. They know how to sell themselves and sell the service they're giving. Whereas I think one of the problems that we've got with younger advisors at the moment is they come from a pure technical financial planning, and they don't have that client relationship management and sales experience. So actually, a lot of the old guard, if they put some effort into training some of the new guard that are purely looking at the technical areas, you know, then you would start to get more of a vibrant sort of younger IFA community, I think.
I think, yes, that's a really good point. And actually, the training that we did get at the large network on how to present ourselves, how to build rapport, and essentially how to sell, it was very good. So for anyone coming from a background that didn't do those things, so there was quite an eclectic mix coming through. So there was, to my knowledge, there was an accountant, there was an ex-police officer, there was a very eclectic mix, but people that wouldn't have had those skills. So it was very good for them. Me personally, I found it quite a difficult 6 weeks because I was just like, I know all of this. Like what I'm actually really interested in is the technical side, and
Yep.
we probably had 2 days training on, this is what the funds are like. Bearing in mind that my experience coming in was I decided to retrain as a financial advisor, found the Trap podcast,
Yep.
and then went into this large networks training and realized that it was very different from the investment thesis and the customer relationship thesis that those guys espoused.
Yep.
So it sounds like you're a serial entrepreneur, but you're also a hard money advocate. So how do
Absolutely. Yeah.
you how do you manage being the manager of various financial advice businesses and being a hard money advocate?
How do I, that's an interesting question. I mean, I suppose to be honest, the way that I sort of see things, I mean, obviously this is a Bitcoin podcast, and I believe in hard money, sound money, and I believe actually financial advisors and actually investment managers are going to be really important over the next couple of decades because I think we're agreed, I'm sure, that there's probably going to be quite a significant transition from how money and financial markets operate over the next couple of decades, and people are going to need to be guided through that. So for me, what I've been doing the last few years, not necessarily too publicly, is trying to lay the groundwork. So um, advising our advice business, but also the sort of things that we can offer out through P1 can provide access to what I believe is going to be quite an important part of how money and financial services operate going forward, which of course is Bitcoin.
Yeah, we'll touch on that. So you've touched on Bitcoin there. One question that I always like to ask our guests. So everyone's against Bitcoin until they're for it. So what's your Bitcoin journey?
Well, you're not going to like the start of it. So the start of it was actually in 2015, where a friend of mine, who I won't mention his name because he's a pretty private individual, but and he hates the banks and he hates all that sort of stuff. How a lot of people that got into the Bitcoin space got there. He said to me, "You got to go into there's this Ethereum thing." There's this ICO that's coming up, and I think you had to put $2,000 in to be part of the ICO, and he didn't have the $2,000, so I topped him up some money to be part of the Ethereum ICO. So my first entry point into, again, I know it's not crypto. Let's just put it together as a crypto. How I saw things then, anyway, was that there's this thing that's better than Bitcoin, and I didn't know much about Bitcoin, but there's this thing that was actually, it was going to be something that was scalable. It was something you could build stuff on, you could program money properly, you could do all this cool stuff with, and the Ethereum ICO came along. I still didn't really get it, but he got it. I gave him the money. I didn't think I was going to see anything. I didn't think I would see it again. I thought I was effectively helping him out because he wanted to do something, and that was money gone. So Ethereum was actually my entry point. And then I ended up doing the Cosmos. I don't know if you've heard of Cosmos. Again, probably one of these coins that you would not like at all. I did that ICO with him and the Polkadot ICO, and so I was very much. I thought these things were better than Bitcoin. That Bitcoin was the first go at it, but these things were doing a better job, right? And they were going to be the future. Um, and that was probably until about 2020, to be honest. I just didn't get Bitcoin, and I would actively say people if they asked me about Bitcoin or whatever, I was like, yeah, but Bitcoin was the first go at it. But actually, all these things people have learned from the mistakes that were made building that, and this was the narrative, right, that I used to take out. So, of course, I now know that narrative is wrong, but it was 2020. I think it was really sort of around the sort of COVID time. I think I read the Bitcoin Standard, um, and I started thinking about it in a completely different way. And I suppose how you would see it now is something completely different from um, uh, uh, the rest of the crypto market. Whatever you think of the rest of the crypto market, right? I still like some of the layer one protocols that we built, but I don't think they're a competitor with Bitcoin. I don't think they're doing the same thing at all. They're doing something different. So I still like some of them. The layer ones, not all the layer two and the rubbish that's been built on top of them. There's a lot of rubbish out there, as we know. But it took me 5 years, I suppose, to from I didn't really understand the whole crypto, blockchain, digital asset space until probably 2017, 18, I'd probably say, anyway, because this was just my mate doing these crazy things and I was never going to see anything from it. And then it took, after I understood that bit, or I thought I understood that bit, 2 or 3 years before I really got actually what Bitcoin could do for the world, if it did have mass adoption. And to be honest, even then, I thought it was going to get some traction. I didn't think it was going to get anywhere near the traction that it's got now, and where I think it is going to get in the future now, with all the tailwinds that we know about that are behind it. So yeah, so it was the crypto. It was the other cryptos that were my route in, I suppose, to starting to have a look at Bitcoin properly.
Everyone has to go through their altcoin phase.
Yeah, I know. I think a lot of people do it. Actually, the other book that I think I read that did sort of was The Price of Tomorrow, which is obviously Jeff Booth, which obviously a lot of people in the Bitcoin world will have read and known. But when you start to look at that and how, I suppose it was that main question about, right, it was that main point about, right, technology should be deflationary, um, as in you should, technology is all about productivity, efficient productivity, right? So you should be able to put less in and get more out. That's what technology does. So inflation doesn't really match what technology should be delivering to us. We should all be able to work less hours, get more out of what we're doing. You know, you've got more time to do all the cool stuff that you want to do, but most people aren't able to achieve that. So we're getting all these great bits of technology, but yet for some reason we're still struggling to pay bills and to make enough money, and everything's getting more expensive. It just doesn't make sense. And I'm sure we'll talk about it later. I'm sure we both agree with why that doesn't make sense and why it's not happening.
Yeah, it's a really interesting one. I'm very slowly reading The Price of Tomorrow, and I mean very slowly, like over the course of months. When I get a day off, I might do 2 or 3 hours or something like that. But I do use some quotes from it in my webinars and my workshops. So the really big one that stands out is, I think Jeff Booth said, in the world of 2018, it took $250 trillion of debt to drive an $80 trillion global economy.
Yeah,
Right. So
exactly.
and that's just absolutely bonkers.
Yeah.
And you're right about the technology. And I actually feel we do and don't feel some of the improvements of technology, right? So we see the price of a Mac, for example, has remained around £1,000 for years, right? But they're getting better and better and better. So in theory, that's deflationary because
Absolutely.
£1,000 10 years ago was a lot of money. Now it's still a lot of money, but it's, it feels less expensive.
Yeah.
And but things like, if I think of things just like a can of Coke or a bottle of Coke, right? In my mind, they've been, I remember a can of Coke maybe being 30p, then 50p, but they were 50p for ages, right? So there were obviously technological improvements that meant the supply chain for those and the distribution channels
Yeah.
got ever more efficient. So in theory, prices were coming down. Why is there inflation? Why are asset prices going up so significantly? Because that's obviously the other thing that CPI doesn't take into account is asset prices. It's just goods and services, which are, for the most part, have either been deflationary, decreased in price, or remained the same price
Yeah.
until actually 2020. So there's a great line that Joe Bryan uses in What's the Problem, which is that as a consequence of inflation, the cost of inputs essentially get more expensive. So
By the
when it
way, I
comes to,
hadn't watched that until I listened to that podcast. So I watched that yesterday. So yeah. So thank you for that. Yeah.
wow, that's so
Mm.
you're fresh. Wow, because that's, I mean, at this point it's probably 6 months old. So yeah, you're welcome. What video?
Mm.
What were your thoughts on it? Hey team, a very quick pause. If you're a financial advisor, wealth manager, or accountant, chances are your clients have already asked you about Bitcoin. And if they haven't, they soon will, which is why I've created the Bitcoin IFA webinars. The webinars are designed to give you all of the information you need to confidently talk about Bitcoin with your clients. They're on demand, so you can watch them at a time that's suitable for you. They count as 90-minute structured CPD, and you'll get priority access to the Bitcoin IFA community. Head over to thebitcoinifa.com to book your webinar today. It takes less than 60 seconds. Again, that's thebitcoinifa.com to book. Now, back to the episode.
Yeah, no, I thought it was great. I mean, to be honest, I've actually sent it to a couple of people already, and I'll probably send it to a few more. Just in terms of breaking down the simplicity and how it's framed, I think yeah, is great for anybody, even not even thinking about Bitcoin, just trying to get their head around why things. I think he makes a point. Everybody has that thought about things just don't feel quite right. Financially, with house prices up here, property prices up here, you know, interest rates collapsed around financial crisis, and then particularly around COVID, and then they're put back up. What is the price of these assets? How is it being established? I think all of that stuff people just can't quite get their head around, and I think he breaks it down in a very simple fashion that most people can watch and get their head around. So I think it's a great video.
Yeah, I completely agree. Side note to anyone watching or listening, the link to Joe Bryan's What's the Problem is always in the show notes. please watch that after this. Pause now, go and watch it and come back. But I always say to anyone that will listen, I believe it is a essential viewing for anyone in the financial services world. But I also think it's essential viewing for anyone, everyone, everywhere. Because what I think we often do in the Bitcoin community is jump straight to the solution. So we're like, we know what the problems are, but we haven't eloquently or succinctly communicated what the problems are, and we jump straight to Bitcoin being the solution, the lifeboat. And what Joe Bryan did was just bridge that gap and just show you in 30 minutes, this is what the problem is, this is where it comes from, this is how it is manifesting in our society, certainly in Western society. And
Well, I think that's one of the most difficult things. If you understand Bitcoin and what it could do, right, and how it could change things, trying to eloquently explain that to somebody in quite a concise manner, which is what you're doing, which is fantastic, and that's what you're looking to take out into particularly to IFAs and accountants, etc. It's so difficult. I actually had to, when I first was trying to get my head around Bitcoin, I wrote, it's actually still on the P1 website. I wrote a thing about I was trying to get my head around why has Bitcoin got value. I needed to put something down into quite a concise article. So I suppose help me get it clear in my head. I knew it, but I needed to get it clear in my head. And so I had something I could just push to people. Actually, I read it again. I hadn't read it for a couple of years. I read it actually only this morning. And I was quite impressed with myself back in 2020 because I do think that actually everything I said in that small article was right. I'll send you the link to it. But it's a difficult subject because it is sort of a paradigm shift. People don't normally think about, the money we're using. Is that something that, it's not always been there. It's not always operating that way. All of us born now, right? All of us operate. Actually, I think pretty much every adult of working age has been using fiat money in its current form. Therefore, it's quite difficult to see what was before and to see what could potentially be in the future. But anyway, yeah, it's difficult to get your head around, and I think he's done a great job with that video.
Yeah, agreed. And as humans, we have short memory, both personally, but also intergenerationally. And there's a thought experiment on this, or proof of this that I like to use, which is that the Roman army occupied Britain for 400 years, right? So from Caesar invading, I think it was in like 64 AD, something like that, until 400 AD. And the Celts and the Brits and the Celts were so difficult to suppress that the army and the garrison in the UK was so large that you essentially had the largest Roman army, single army, in the empire. And on 3 separate occasions, the general, or the person that was looking after the UK, decided that they wanted to go and be the emperor of Rome. So they marched the army from the UK to Rome. And they did it on average every 100 years. So
Yep.
for the entire occupation, roughly once every 100 years, a general marched their army from the UK to Rome and got beaten. So
Yep.
they just didn't read their history, or
Yep.
they thought they could beat history. So you're absolutely correct in that anyone born from 1971 onwards believes that we've just always had this currency that's melting. But one of the things I like to say in my workshops and my webinars, or I'd say it in the webinar and I say it in my workshops, is for thousands of years, we had a centralized money currency that was backed by a decentralized money. So until 1971, in theory, right, more likely the First World War in Europe, but in theory, the world as a proxy by being pegged to the dollar, until 1971, currency was backed by decentralized hard money. So we are 54 years into this experiment.
Yep.
And judging on how things are going, I wouldn't say this experiment is going well. I wouldn't say it's a success so far.
Yeah, I mean it's an interesting one though, isn't it? I completely agree. I suppose the only counter argument you get from people is, well, actually, to honest, look how far the world come in those years from a technological perspective, and in terms of all of the great things that we've now got available to us. So it's like an interesting one because in a weird way, sort of the fiat system has actually fueled some stuff that could be viewed as really good, and it could be it's been a debt fueled way that some people have benefited from and got themselves incredibly wealthy. Obviously it's taken away from a lot of people, but everybody's still got all of these great technological advances that have come from that. So I suppose I'm not looking back at the 50 years up to 71, but that's the argument sometimes that I get back when I talk about Bitcoin and this, removal of the gold standard, and the fact that it's effectively just it's based on nothing. It's just a promissory note. There's nothing that stands behind it. The argument back is, but look at all the great things that have been achieved, which sometimes can be quite hard to argue back on.
Yeah, I agree. Although I would say, actually, we saw the vast swathe of technological innovation actually came from sort of 1947 till sort of the mid 60s, right?
Yeah,
So if you think by 69 we landed on the moon, 1947 coming out of the Second World War, or 1946 coming out of the Second World War, we didn't even have the jet engine. And by 1969, we're landing on the moon. We've got transistors, we've got fiber optics, stealth technology was in its nascent forms. There's actually a conspiracy theory for that, which is Roswell. The Roswell incident was 1947, and then you see a massive, vast improvement of technological improvements only coming out of the US. So tinfoil hat time, if you if you're into those things. But
but your points then in terms of history before then, those are all very valid. As in the base, actually, the technological advancements we've currently seen now in the last 54 years, as was actually established prior to then. So all of these are good arguments, but it's a big subject.
Yeah, agreed. But so we'll never be able to know what the world would have looked like if we'd have stayed on the gold standard, right? So if we hadn't have had this debt credit based accelerant, essentially, right? That it's probably like pouring gasoline onto a fire, right? So we've had this massive rip roaring run, but the debt is coming, right? The bill is there to pay. So something is going to change, right? But as Lynn Alden says, nothing stops this train. There isn't a government in the world that is going to take the short-term hit on trying to clear some of this debt. Not if they want to get re-elected over their 4-year election cycles.
And to be honest, I think that it was the financial crisis. You saw in 2007, 2008. For me, seemed to be that point that it sort of went over a tipping point that it was like an unstoppable thing. Interest burdens on sovereign debt and all sorts of other debt associated with that. It became nearly an uncontrollable snowball that then COVID hit, and that snowball's got even bigger and it's traveling even quicker. That's for me what it feels like, is that it was sort of controllable and people weren't pushing that big red button, whatever you want to call it, until or as quickly as they were until that point, the financial crisis. Then it was like big red button, just any problems, keep hitting it, and that just fueled the fire. So again, that's why I think that's when I really got my head around Bitcoin, and the fact is that you can't just continue with the current system because it is unstoppable now. Ask anybody to look at the US national debt and say how that's going to be kept under control or how it's going to be dealt with. It's ludicrous.
Well, I think, so I use a chart in my workshops that is slightly out of date, but it shows that at that point there was $33 trillion of debt for $22 trillion in existence. Well, we don't even have enough money in existence to pay off the debt. So how are we going to do this? Well, then nominally we can pay off the debt if we just print loads and loads more money, right?
Yep.
Let's come back, right? We spoke about P1. Let's talk about a bit of P1, because you guys have a portfolio. I need to be careful with my words here. It's a portfolio, not a fund. You have a portfolio that gives Bitcoin exposure. Talk us through the inception of that, where it came from. Just talk us through that journey.
Yeah, so thank you for pointing that out. Yeah, it's not a fund. It's a model portfolio. So for those sort of advice that are watching this, they'll know what a model portfolio is. But effectively, it's a portfolio that lots of clients could be attached to or could be invested into. But it's not a fund structure that you buy into one fund. It's a portfolio of securities, of shares. I mean, the reason that came about, if I'm honest, is completely selfishly. I wanted a portfolio. For my own pension, my own ISA. So actually I could have some tax efficiency around my exposure to this asset class. So really, it was a portfolio I had started to construct myself anyway. And then we realized that actually, for the right type of client and somebody that understands it enough and the right type of advisor, it could be something that actually, if we just put together in a portfolio, that could be accessible. it's something that people may want to use. Funnily enough, it was in 2021 that we launched that portfolio, which wasn't a good year if you remember from a price
Hmm.
perspective. Yeah, it's one of those things that as Bitcoin does, it gets a lot of interest and that interest wanes, and it gets a lot of interest and that interest wanes. But yeah, it's been running now for we'll be coming up 4 years. And yeah, well, it's obviously past performance is not a reliable indicator of the future, which I've got to say, of course. But it's been our best performing portfolio across everything we do by a factor of I think about five uh, over that period. So it's been fantastic for those people that have had exposure to it, and yeah, it's something that I was quite passionate of having available. It's something, if I'm honest, we have got to be careful as a regulated company taking it out and pushing that sort of thing too widely, because it it wouldn't be deemed as appropriate for a lot of clients to go into that portfolio, or even for those larger clients. Most advisors would see about putting a small part of the client's assets into there. Um, and it is just because it's something different. Can't take away it is volatile, and you've got to be cognizant of the regulation around it. So, like I said, how far we've gone ahead, sort of marketing and pushing it out there, has probably been relatively restrained. The main way we did launch it actually is we did sponsor the Bitcoin Collective Edinburgh conference in October 21. So I think we were the joint main sponsor, I think, with Coin Corner or OKX or something it was at the time. So that was sort of a great time up at that conference in New York. So I think Jordan at the Bitcoin Collective, and those guys did a great job, and they got all of the big names, or a lot of the big names in Bitcoin there, which is fantastic. So that was sort of our launch point for the portfolio.
Amazing. Yeah, quick shout out to Jordan and the Bitcoin Collective. I think they've just started doing a new meetups. They've got one in November. And that conference did really well, considering it was, I think it was held right at the lows, right,
It
in
was
2021,
absolutely.
2022. Yeah.
Yeah.
But yeah, so look, congratulations on the success of it. Let's touch on when you were saying it's not necessarily suitable for everyone. Is that because of the volatility?
Yeah, I think so. It's unfortunately how the advice world, the regulatory world goes in the investment space now, particularly when you're dealing with retail clients, is unfortunately a lot of the focus is on short-term volatility. That is that is generally what people use as, for those that don't know, but I'm sure everybody does on this podcast. Volatility is literally how how much it's moving up and down, right? The value of the portfolio. So if it moves down, people panic, people sell. If it goes up, people love it. But the volatility creates nervousness, uncertainty, and if you've got a short time horizon, and you've got to sell out one of those lows, then it's not necessarily a good thing to be invested into. Um, so it's all to do with long time horizon. I mean, volatility is something that can actually be embraced. If you've got a long time horizon, actually, generally the assets with the highest volatility generally have the best long term compounded returns. That's a very general statement, but so it's all about time horizon. But the problem is when you're a financial advisor or you're an investment manager, you've obviously got to look at the regulator, right? And you've got to look and say, okay, well, what would they perceive this as, and who would they perceive this to be correct for? So you've got to be very cognizant of that when you're taking anything out to market. So I think most advisors at the moment, they would dip their toes into advising. It is a portfolio bias. We're regulated, so absolutely something an advisor can advise their clients into. They just need to make sure it's the right amount for that particular client, and probably that the investment time horizon is long, which generally works for anybody that's got a bit of a Bitcoin hat on, because everybody should have a long time horizon with Bitcoin, right? Because this is a multi-decade long change that's happening. So if you think you're going to put your money and you're going to get a 6 month quick win, you may do, but you may just as likely not do and lose a lot of money. So um, time horizon is important.
Completely agree. Yeah, Peter Lane, when he was on here, said exactly the same. He said, if you want to trade something for 15 minutes, go and trade something else. If you want to trade something for 15 years,
Yeah,
you might want to look at Bitcoin.
yeah,
And yeah, in my workshops, I make it very clear it's a minimum 200-week holding period, which is in line. That's roughly 4 years. But obviously, FCA requirements are 5 years for any investment. That's what you should be planning on. So
yeah,
to date, based on historical returns, not financial advice, but Bitcoin has a 100% hit rate if you hold for a minimum of 200 weeks of returning more than your investment. And actually,
Yep.
just some stats that I was made available of this week. If you'd have bought one Bitcoin at every top, so the tops I think have been $25, $1,200, $20,000, and $69,000. So if you'd have really messed up and just bought on those days, you would currently have 4 Bitcoin. It would have cost you roughly $90,000. As we record this today, it would be worth roughly $480,000. So about a 5.3x. So if you just hold for a minimum of 200 weeks, historically it's always, so it is long-term time horizons, long-term wealth building tool. Completely
Yep.
agree. What were some of the challenges that you faced when building that portfolio? And then how have those challenges progressed through the history of it? Do you still face the same challenges today?
So I initially went to launch it as a fund, actually, and it was just going to be direct securities, so that should be absolutely fine, right? So we do have a fund already, so we've got a partner that create funds, and they act as the authorized corporate director. They're the guys that the actual fund manager, and then we're engaged as the investment manager to operate the assets within there. Just because it was going to be called a digital assets fund at the time, so this is 2021, of course. Even though it's just normal securities, so these are all just listed main market, generally listed securities in either the US or the UK or Europe. So all standard stuff that's in most funds that you're invested into. You're probably invested into them through your pension scheme without you even knowing. But it was just a concentrated fund with a specific focus on having exposure to the Bitcoin price, or people operating in the Bitcoin industry, if you want to call it that. But in 2021, they were the ones that had to approve, set up the fund, go through the prospectus process that you have to go with to launch a fund. They just wouldn't entertain it. And I did speak to then somebody else, and they just wouldn't entertain it. And if I'd called it something like the P1 Tech Fund, probably could have got it launched. It was purely because of the name. It wasn't the substance of it. It was just the name. It was just the bad regulatory smell around it, which is a shame, to be honest. If I could go back, I would have pursued it with more vigor, probably, because it would have been a great if I had it. If it was in a fund and we could make it available through all the main, direct-to-consumer platforms, all the ones that most people that maybe don't have an advisor even use, like Hargreaves Lansdown, all of these sorts of guys, we could have made it available there. And actually, it would have probably done incredibly well. It was just at the time, 2021, as we already discussed, Bitcoin price was down. No matter for me, and maybe that shows that. Well, am I saying the right? When the Bitcoin price is down, I was like, you lose a little. You can't help but lose a little bit of faith. Like, have I got this? Have I got this wrong? Have I got this wrong? A little bit of doubt creeps in. And the
I
problem is
think
when you're going to put a lot.
especially during those lows in November 22, that FTX collapse, when it
Yeah.
went from 20 to 15 in a day, that's where I think, that's certainly where I got shook.
Yeah, exactly. And when you've got, so launching a fund, right, it costs a lot of money to launch a fund, and unless you get it to a critical size, which I'd put minimum, you're talking like 25 million of assets within it, but ideally 50 million plus, and then 100 million plus to make it really long term viable. If you don't get it to that scale, that's a cost, an ongoing cost that you've got to keep this fund alive. So you've either got to have a lot of money that you can just put in and seed the fund with like 20 million quid, 25 million quid, which is what all the big guys do. P1's getting bigger, we've got decent assets now, but in 21 we were a lot smaller than we are now. So I was like, this is a big, if I get this thing, even if I persuade somebody to launch this for us and we're running it, we're the one that's going to have to be paying the cost if we don't get it to a critical mass. Because just to launch a fund, just to put some perspective on it, you're probably talking at least 100, 150 grand of costs to get it launched. This is legal costs. This is all the different costs, that compliance costs, all of the time costs that go into launching it, and you're probably talking about somewhere like £75,000 per year just to keep it going, which isn't, in the scheme of things, isn't a lot of things. But when you're running a business, you've got lots of other costs going out the door, and you've got lots of other focuses, and particularly when the price was low at that point in time, I thought, let's just put it together as a model portfolio. That's something we can put together quickly. We don't need to get somebody else to approve it, and we can, at least we've got the technology to be able to offer it through our own investment platform, which is luckily what I have with our P1 platform.
Nice. Yeah, and I think the naming the naming thing is super important. I put a post out recently that just said if Bitcoin's performance were wrapped up in the name the Vanguard Growth Fund,
Yeah.
right? So which had achieved 125% ARR since inception in 2009 and had even achieved 55 to 60% ARR since 2020, every advisor on the planet would be putting a percentage of their client's portfolio into this, right?
Yeah.
Even, but because the name is Bitcoin, or because there is digital in your portfolio or in a fund name, you're right that there is this almost, I don't know, like it's beyond apathy, isn't it? It's almost it's an anathema to the FCA, the regulator, and to most advisors. But if you remove the stigma of the name and look objectively at the performance, you're like, this might be something that could help me and my clients.
I should have just called it something like the Satoshi Tech Fund or something like that, and then probably could have got it launched. But
This, yeah, just a little nod, or the SAT Tech Fund,
yeah,
something
exactly.
like that.
Yeah.
Yeah, 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 yeah. James, let's touch on the announcement of the FCA on the 6th of June this year. So it looks likely that the ban on retail access to Bitcoin or crypto ETNs is going to be lifted. The rumors that I'm hearing are as early as September. We record this at the end of July now, so within, potentially within 6 to 8 weeks, we'll see.
And that is genuinely expected. So our investment team are regularly speaking to fund managers, and they've spoken to at least two that are in this space. They've actually got products in other countries that is what their expectation is. So there seems to be quite a lot of confidence around this.
Okay, that's good to know. Thank you. So, what are you doing as the MD of Prydis Wealth and the CEO of P1? What are you doing to prepare for that?
Hey team, just a quick pause to say a huge thank you. You've given us your most precious assets, your time and your attention. And honestly, it means the world to us. If you've enjoyed this episode or you take value from these conversations, it would really mean a lot if you could like, comment, or subscribe. Those things really help the algorithm and they help the channel to grow. And if there's someone in your life who would take value from this, maybe a fellow advisor or someone just curious about Bitcoin, please send it their way. You never know what it might spark. Okay, back to the studio.
Well, I suppose there's two things with two hats on, which is a little bit of a plug for you, Dan. Obviously, we're talking about you coming and doing a workshop for our advisors and self-employed advisors. So from the advice side, you know, I know obviously a little bit about Bitcoin, but I wouldn't. To be honest, I think I'd be terrible at trying to educate people in a structured manner on it. That's for a job for somebody like you to do. So I think educating the advisors. We have got some advisors that are really interested in the space already, but I think you've got to make sure the advisors are knowledgeable so that actually they can have informed discussions, right, with clients. Which I think advise, even if there isn't a regulated product and they can't officially advise on it, again, I think other people on your podcast have said, I think it's really important that people that advisors start to educate themselves on it. Because if you've got, I think it's what it'd be the fifth largest company in the world if you were to look at it as that, or the fifth largest asset class in the world. I'm sure that Dan, you follow that slightly more close than me, or bigger than Amazon, I think at the moment. I believe Bitcoin is the total market cap. You know, any client would expect you to know a little bit about, gold and why you'd hold that in a portfolio, or maybe silver, why you'd hold that in a portfolio, or why, actually probably quite a large amount of their standard holdings are probably in, the largest tech companies in the US. Why wouldn't you have some knowledge about Bitcoin? That just seems farcical to me. Whether regulation or not, it's a massive asset that, surely you've got to pay attention to it. So educate yourself on it. So that's one thing we're doing with obviously your assistance. in P1, luckily, the one thing we've got is we've got an investment platform, right? It's an intermediary focused investment platform, so financial advisors can advise their clients to transfer their assets to the platform, open pensions, open ISAs, junior ISAs, all that sort of stuff. So as soon as we've got a retail approved Bitcoin product, be it an ETN or otherwise, absolutely, I'll be speaking to our custodian about making that available. So advisors can advise their clients to have maybe a small part of their portfolio, or discretionary investment managers, including ourselves, can consider it as a holding as part of a wider portfolio. For me, that's a big step of validation for Bitcoin in a portfolio, because finally, if you've got some of the big asset managers out there that are launching these things, just like what happened in the US, suddenly you can easily, access becomes easy. And actually, if it's got a retail approved, effectively sign off from the FCA, suddenly that regulatory risk feels like it's dropped. So I think that's going to be a massive thing. So those are really the two things we're doing. We're keeping an eye on it, and absolutely, as soon as we can get it onto the P1 platform, we'll be looking to do that. Obviously, we've got to do the research to go through an approvals process to make sure we fully understand the product itself before we do so. But then it's education. Luckily, in P1 within our investment team, we've already got a lot. We've been running a Bitcoin portfolio, or a Bitcoin focused portfolio for 4 years now. I actually wanted to launch something in 2017, but that would have excluded Bitcoin, which would have done fantastically if we could have got something launched at the time. But everything's about education and access.
Yeah, completely agree. Thank you for the plug. Yeah, so that's exactly why I'm here. Completely agree with you on the asset. So right now, where we are sort of in and around $120,000 for a Bitcoin, depending on that slight price volatility, we're sort of ranging between about 120 and 117. So on a daily basis, it can be flip-flopping Amazon's market cap. So Bitcoin is, depending on what day you look at it, it's either the 5th largest or the 6th largest asset in the world by market cap. You're absolutely correct in that most advisors would know how to talk about gold, why it would or wouldn't be relevant. The other assets in and around Bitcoin are essentially Nvidia, Apple, Microsoft, and gold above it. Sometimes Amazon at the moment, or sometimes Amazon is below it, and as is Tesla, right? So it's right in there around the Mag 7.
And silver's further down now, isn't it?
Silver's quite far down. I think you've got, is it Saudi Amco, sort of in the top 10. So to be honest, I don't really look below Bitcoin. I just see where Bitcoin is. And depending on how this cycle goes, I would not be shocked to see Bitcoin sit second on that list for a period if this cycle plays out like previous cycles, right, where we would expect to see sort of anywhere between 30 and 50% of the gains in the next couple of months before a significant downturn in 2026 if the cycle repeats. So it wouldn't shock me to see that Bitcoin is actually sat second on that chart for a period. And if advisors were to go in and look at their clients' portfolios and say, well, how much of the overall portfolio is actually allocated to the Mag 7? Because if they're just doing an index tracker, it's probably somewhere between 0.5 to 2%, depending on the ideology, let's say, of the portfolio. If it's tech focused, it's probably a bit more. So, and that's really where I just try and start with advisors, is to say, well, firstly, just understand it. And then if you are going to recommend it, it's just the latest addition to the great companies of the world. It's just the latest addition to the technology that drives human ingenuity. So a 1 to 2% allocation, when we're thinking in decades, is a really good place to start if it's right for your client, because that puts it in exactly the same region of all of those other assets.
Yeah, and absolutely, I think it's an important, and this is why the ETF or ETN is so important, because when you think about Bitcoin, people that really understand it, and they're sort of, people like, not your keys, not your coins, that sort of terminology, with your own sort of, have your own private key, your own, your ledger, your Trezor, whatever it is, and hold them. Most people aren't going to do that, right? It's just like most people aren't going to have gold in a safe at home, just most people aren't. And the fact is, if you're a financial advisor, you're not going to advise your client, even with gold, you're not going to say to your client, what you should do is go to, Birmingham or wherever it is where you can buy a lot of gold. I always think of that because I think there's a couple of billion companies that you can buy stuff from that are in Birmingham. But you can't advise your client to go and buy physical gold and then tell them, all right, yeah, and then buy this safe and then put this money in your safe and make sure you remember your code and make sure a couple of other people know your code just in case something happens to you and you can't access it. Right? No financial advisor is going to do that with gold. So thinking that advisor is going to do that with self-custody Bitcoin is just not going to happen, right? That's why the ETF or the ETN is going to be so crucial, because suddenly it becomes something that's quite easy because the advisor can manage it, the investment manager can manage it, they can just buy it and it just sits alongside everything else that the client's got. So I think that's crucial.
I completely agree. For the kind of people that will employ a financial advisor, well, I think the majority of them do that because they're outsourcing having to think about this stuff, right? So some of them may want to get involved in part of that portfolio allocation. Actually, I recently put a post out about this, about how to handle that so that you don't just dismiss that person's emotions or values. If they're coming to you and saying, actually, I might want to look at some Bitcoin, if an advisor just turns around and says, not regulated, don't want to talk about it, dismissing them rather than just trying to emotionally understand the feelings behind why that client wants to invest in Bitcoin and then exploring that, whether you recommend it or not. But you're absolutely correct that the vast majority want their advisors to handle it. And we need to provide Bitcoin where people are, right? We can't just turn around. I remember speaking to during my time as a financial advisor, the hot minute where I was a financial advisor, I was speaking to clients who were 55, having to access their sort of 50 to 70k pension now because they were broke.
Yeah.
And in theory, this 50k, 70k is supposed to last them till they're 100. And I just remember thinking, you need Bitcoin. Obviously, I can't talk to you about it. It breaks the law. I lose my job. I'm not going to do that. But I also knew these people wouldn't know how to take out an ISA. Like, let alone, they didn't really understand the banking system. Contactless was, completely new to them.
Yeah.
I just remember thinking there is absolutely no way you would understand signing up to an exchange. You would lose everything trying to send something from one wallet to another.
Yeah.
Right? Like, even just the idea of which network do you want to send this on? Obviously, Bitcoin, you're sending on the Bitcoin network. But, if you were trying to send Tether, USDT, you can obviously send that on, I don't know, hundreds of, certainly 3 or 4 different networks to my knowledge, and you're going to end up losing that money. So it's a complete anathema to so many people to try and get their head around cold storage, multi-sig, wallets, etc., etc. So you're absolutely correct.
Well,
which is why
part of the reason why the banking system obviously first got created, particularly obviously back in the day, obviously people didn't want to take around gold with them, right? Because they may get robbed, they may get it taken from them. So actually, you could give it to somebody who then gives you a piece of paper that says you have that, but it's a bearer asset. Then you got a lot less chance of being robbed, of being taken from you, and you've actually got an ability to go back to where you first deposited and say, can I have my stuff back, please? And that does link into this because people like having an insurance policy or somebody to blame or somebody that is responsible for something that's very important to them, that are maybe better at holding on to it than themselves. So that's why, again, linking back to everything you've just said and why an ETF or an ETN is so important, because people want that, right? They want that insurance policy. It's got to be where they're used to seeing assets and buying assets. But again, they want to know if it goes missing somewhere, they've got somebody to blame and to get their money back somehow. That's just what most people want. And people don't talk about it much, but a lawyer, right? An accountant, a financial advisor, most professionals that you use, most things, you could do your own tax return, you could do your own company accounts. You could actually, open your own pension, and you could invest your own money, and you could probably use ChatGPT to do some of your legal contracts that you need. But actually, the reason people still go partly back to, they want the technical expertise, of course, but part of the reason some people use professionals is because they don't think about it in this way, but it is actually insurance policy, right? Because if something goes wrong, you've got somebody to blame, you've got somebody to potentially recover from, or that's got to sort it out for you. So most people operate in that way, and they want insurance policies all around them, whether it's an active insurance policy or it's just somebody that they can blame or somebody that's responsible and not themselves. People love abdicating responsibility. That's just human nature, I think, a lot of the time. There's obviously probably the hardcore early type Bitcoiners that are not those people, but they're not the majority of people.
Yeah, I completely agree. And I think it's also why the regulation is so important with the ETFs and ETNs, is because without having those, we have forced people into, this is the wrong word, but more dangerous operations in order to buy Bitcoin, right? We're sending them to exchanges that are typically offshore, right? There's only one native that I can think of, so Coin Corner, based out of the Isle of Man, who are
Yeah.
a sort of native British exchange. Other than that, all of the exchanges that I can think of are foreign based, foreign owned. There is absolutely no recompense. There's no coverage by FCA regulation. There's no FSCS coverage. So it's actually by banning people from having regulated access to Bitcoin, it's actually done more harm than good.
I
So
agree, 100%.
it's a welcome change. If we really think that this ban on ETNs is going to get lifted, then the only question is, does it go far enough? If we're now saying that Bitcoin is okay, then in theory we should have ETFs along with it, because personally, if I had the choice between the two, I'd rather own a portion of a fund than own the promise to be paid the price of something when I sell it.
Yeah.
But then, in theory, if Bitcoin is okay, we should be able to hold on-chain Bitcoin within our ISAs, within our SIPs. Now, I think we are years away from that because of just the logistics of trying to, where do you custody it? How do you audit it? How do you stop people moving it on-chain?
Yep.
All of that stuff is going to be super difficult, probably led by the US. So I think we're, probably a decade away from that.
Yep.
But this is just it's the first baby step. And it's also why I think this first baby step is also the first baby step for advisors to take, which is just get educated on it. Like, whether you want to advise on it or not, it's a hedge, right? All of us are risk managers in our personal lives, but as financial advisors, we are professional risk managers for our clients. Bitcoin has been the best performing asset for the last 16 years. It might continue to be the best performing asset for the next 16 years, let's say.
Yep.
So it might be a hedge for you to just understand it, even if you don't then recommend it for a year or 2 or 3, until there is more regulation around it, because, maybe they just lift the ETN access and that's it. And that's going to be quite difficult for advisors, unless they come and use the P1 platform. It sounds like you guys are going to integrate an ETN relatively quickly. But I know, I've spoken to other advisors and I've asked them, what are you going to do on day one of the ban being lifted? And they're like, I don't know. Like, how do I get access to this thing for my clients? But education is the first step now, so that, if at some point in the future you change your mind, if at some point in the future you know how to get ETN access, if at some point in the future you decide that actually this is the thing to go all in on, I'm not saying to do that, but,
Yep.
it's a hedge now to just educate yourself and know about this asset.
Yeah, and even if you don't want to be the first mover, right? That you don't want to be the first advisor to advise a client to use a Bitcoin ETN in the UK. I get that, right? Because you're the first mover, and you're probably taking on quite a lot of risks by being that. But actually, what will happen is, but if you educate yourself now, what happens when you start to see actually it starting to proliferate, or assuming that it does, and it starts to become something that's more common that people are advising on, you're in a really strong position, right? Because you already understand it. So you don't necessarily need to be the first mover, the one that's taking the first step. But you can see how the market plays out for 6 months, 12 months, 18 months. But actually, at least you're going to be in an informed position that actually, when you think that actually the risk is dissipated, because actually a lot of people have started to do this now, actually you're in a really strong position to go out there and start advising clients.
It's a really interesting one in that. So I used to work in ad tech, right, and in startups, and we always used to say you can be first in market or you can be best in market. You're rarely both, and you often get first mover advantage. I feel like in the financial advice world, when it comes to crypto or Bitcoin, people see it as first mover disadvantage because of the slings and arrows that you're going to take.
Yep.
I've spoken to people at Galaxy, and they're in conversations with all of the large banks, all of the main named banks that you can think of, and they're asking them about Bitcoin custody, Bitcoin exposure within the apps, because obviously within Revolut, Monzo, I think you can get exposure to Bitcoin, but I can't do that in my NatWest app.
Yep.
And they're asking them about it, and every single one of them wants to do it. No one wants to be first. So no one wants to be first, and no one wants to be last.
Yep.
So they are all getting up to speed on this new asset, so that the second someone puts their head above the parapet, the rest of them will go, we're in. And
Absolutely.
I feel like I've also spoken to some DFMs, and they've got exactly the same thing, which is we will do this as soon as there is demand from advisors, or someone else does it first. So it's like this, they see it as this first mover disadvantage, and that's
100%.
okay. That's absolutely fine. It's just that if you then want second mover advantage, you need to be as up to speed as the first mover at the same time.
And it is using head above the parapet is exactly the thing. Effectively, somebody, particularly in the regulatory landscape, if you put your head above, somebody wants to watch and see if you get shot. And if you don't get shot, then they'll put their head above too. It is that simple.
Okay, James, I'm wary of time. Thank you so much for coming on today. There's a couple more questions. So the first one, what is one thing that Bitcoin has brought to your life outside of number go up?
Predominantly, I think it's probably thinking about the financial system in a different way. And that sounds quite broad, but actually before Bitcoin, there was nothing really to have as something to allow you to contextualize the rest of the financial system, and particularly the fiat money system. So for me, it's brought, I suppose, perspective to everything else, which again maybe sounds quite broad, but I don't know if there was Bitcoin whether I'd have thought about it, because you don't think about gold in the same way anymore, right? Because you need to be able to send money online, you need it to be highly portable, you need to be able to send money to your mate in Australia if he's at whatever it is. Gold's not that, right? But so I was never going to spend much time thinking about gold in that way. Bitcoin, suddenly you're like, well, actually, it's got the same sort of properties as that, but actually you can send it globally. It works in the world that we operate in a lot, which is on our laptops, that on the web. Suddenly it was something I spent some time thinking about, and it gave perspective to the rest of the financial system, I suppose.
Yeah, that's a great answer. I think once you start down this rabbit hole, it's a bit of a paradigm shift.
Absolutely.
And lastly, where can people get hold of you?
Well, there's the p1-im.co.uk website. I'm on LinkedIn most of the time. I've never quite got my head around X and Twitter, so LinkedIn, search my name and you'll be able to find me and message me. And I think that's actually how we first communicated, Dan, maybe. But yeah, I'd probably say I'm old school with just being on LinkedIn. Really, I've not even got my head around Instagram and all that sort of stuff too. So yeah.
You skipped all of that technology in between, went straight to Bitcoin. Love it.
Well, exactly. Somehow, yeah. I find too many platforms, too much noise. I struggle with it.
James, thank you. We'll have to do this again once the ETM ban is lifted.
Absolutely, 100%.
Enjoy the rest of your day.
Perfect. Cheers, Dan.